The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Before we get started here today, if you get a chance, I would suggest you go into Basil's all-day session today, folks. That guy really is good. He makes Elliott Wave, doable. So he does a great job, and his historical stuff is really fantastic. So if you want to treat yourself to an early Christmas present, I would suggest you do that. Now, I've posted the charts for the German DAX, and as you can see, this market is still in a very strong uptrend. However, you can see that we just completed a smaller Gartley pattern on the DAX on the 15-minute, and we bounced a little bit, but really not very much. On the daily, as you can see, it looks very, very strong. We're just like the Dow Jones, just setting up there, just extremely high. So this is could easily break out of either direction without any trouble at all. So let's take a quick look here at the FTSE. You'll be able to see here that it's been moving down a little bit more, and that's one of the things that we want to get moving up here. Let's get this up here. Okay, you'll see here that we still got a target down here of about 62.40, down about another 100 points in the UK. But it's right at that 78% level, and it's been there for several hours, so it could easily, stay at that point. So I think that's very important. Oh, one other thing. I got a phone call yesterday from one of our students that we've known for a long time and got to know his family, and he's called me, and I got called away from my phone call. We chatted for a long time, and then my daughter called in. But Angelo, I know you're listening, and thank you for calling in, pal. That made my day. So I really appreciate it. The best to you and your family. Okay, now let's take a look here at something that's interesting. For the first time in a long time, I had to take a day off, of course, for the old doctor stuff, and I'll have to tell you a story about that in just a minute. You'll see here, this is the first time we've had a Gartley pattern in the S&P yesterday at 36.24. That was the first time we've had that nice ABCD, coming off that level. And we've completed that pattern. That ABCD completed down there at the 1.618 expansion at 35.44. So as long as we don't get it below 35.44, this looks like we could get a bounce from here. But folks, I will say this, if we go below that 35.40 level, that's not very good, especially after the small bounce that we had late last night and early this morning. So it really needs to hold above that 35.40. Otherwise, it could be a more substantial correction than that we're actually looking at. So we need to pay, pretty close attention to that from the short side. If this is going to be some type of a top, tradable top, well, so far it has been on a shorter term basis, but longer term, I'm not so sure that's going to be the case. It's still a little bit early. Now, last night I was asked to appear on a webinar. Of course, it was daytime over there in the UK. And I was asked to bring up some stuff that, historical stuff and trading stuff. And one of the things that we talked about was because this is where we are on some of these things right now. This is the British pound on a weekly basis. And I wanted to point out they were talking about Fibonacci numbers, and some people didn't believe him, which is all right. Heck, that's all right. We respect their opinion, however wrong it may be. But if you'll notice there, back in June of 2016, which is June 27th, you'll know that that's when Brexit happened. You'll notice the little 1.618 expansion or contraction number that was setting there. There was a multiple ABCDs on that going up into that right at 50 to 150. And this was one of the trades that we actually did. We sold it at 149.90, and we had a 100 pip stop on it. And when the news hit, it just literally collapsed. And you'll notice it went from, you'll notice the very first day, it went from 150 all the way down to 130. That's 20 handles. The reason why I'm bringing this to your attention is this. I put this red box up here to show you the price action, because you can see the lows of 2016 were at 138. Well, if you're selling at 149, you go to 138, that's 10 handles. And we went through there just like it didn't even exist, okay? And I made the mistake of getting out with 19 handle profit, which was a lot. I mean, that was a huge move. And if you'll notice here, the market just kept going down. And then you'll see where that 2.618 expansion was. The reason why is you'll look over the next 10 days, the next 10 weeks, you can see that very small ABCD correction there at the 135 level, okay? That's an ABCD in a bear market. This is a weekly chart. Then it went from 135 all the way down to 118. The reason why I'm bringing this to your attention is that day that happened, on June the 27th of 2016, I was chatting with Tom Hugard like I usually do every day, and he was extremely bearish. And he actually, pressed that all the way down. In other words, one of the adages, when you're fearful, you must be greedy. And when you're afraid, you must be afraid, be really afraid. I forget what the exact quote was that Warren Buffett used, but when you need to, I'll have to think about what it was, but I think it's when you're fearful, you must be greedy. When you're greedy, you must be fearful. That's what it is. Anyway, he pressed that all the way down and made a great deal of money. So the reason why I'm bringing this to your attention here is we're going to try to learn something, okay? And that's always good to do, and learning is always fun. Here's where we are in the gold market, boys and girls. We've been in this for quite some time now, and we really want to pay attention to it. You'll notice that number up there where the ABCD, where the C comes in there at 1965. We sold it at 1958, 1959 is where we sold it. Then we got to break all the way down, to the 1946 level, okay? And that tells us that our profit objective on this has the potential to come in at 1724, to even 1724 to 1780, something like that, all right? Now, the reason why I'm bringing this to your attention is this. You'll notice that we had that little 5-day rally that ended on Friday, and so far this week we've been down. We're trading right now right around the 1861 level. We hit 1850 just a little while ago. Now, the strategy that we're employing here is the old low was at 1846, okay? Now, here's what I said in the video last night. I would suggest adding a third position. We put the first one on at 1958. We put the second one on 1893. So that has a 30-handle profit in it. If it gets to below 1844, if it breaks below 1844, I would add another position. But what you have to do when you're doing that is you've got to put a $7 stop on that. And the reason for that is that it could easily reverse. In other words, take out all those stops and then, really go back up. And one of the reasons is this could be extremely bullish chart if we don't take this out very soon. That means that this market is getting ready to, to move to the upside. And longer term, we think gold's got a chance at 2,500. I hope that helps. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I've had a couple of questions of personal stuff, which is okay. I don't mind answering them if I can. But one of the questions that someone asked me is, what's the most scared I've ever been in my life? I didn't know if they meant by financial being scared or personally being scared, but I know them to both. The second one, the personal one, is the most the scary. But in the financial part was it was in October 1980 when I was at Drexel. I had shorted on the Friday night. I had sold 800 contracts of gold for our different customers at Drexel at $7.07 per ounce, and it working about $8 in our favor as of that Friday night. And then Sunday morning when I was getting ready to go to work, I get up early in the morning at 5, and I'd turn on to KNX in Los Angeles, and Charles Osgood from CBS would be on, giving his morning gold fix, and he started out saying, "Ladies and gentlemen, there has been an event in the Middle East. Iranian planes have hit the nuclear power stations in Iraq. War has broken out in the Middle East, and the price of gold is soaring." And I tell you, folks, that just brought about it, because I'm thinking, oh, no, don't tell me I got to start over again. And I'm short 800 contracts, and he's saying the price of gold is soaring. So I'm staying in the shower. I turn off the shower. I don't even shave. I just throw on my sweats. I run downstairs. This is taking me about 2 minutes. I hop in my car. I'm heading towards the freeway. Turn KNX on, and I'm listening. It's just one commercial after another. And finally, he tells a story about the Iranian planes, and all this stuff. And he said the price of gold in London is soaring. It's $2.65 higher today, is what he said. And I'm saying, oh, my God. I said, I went through all this for this. And my heart just sank, because I knew if it can't go up with that, it's in big trouble. By the time I got to the office, it was down about $15. And they had a $50 limit, and it went limit down that day, and it went limit down the next day. And unfortunately, I covered on the second limit day down at about $500. And of course, it went to $230 20-some years later. But that was the main one. But the most scared I've ever been in my life, hands down, without a doubt, was in Memorial Day, 1979. We always went to the Ahwahnee Hotel up in Yosemite to spend the 4-day weekend for the holiday there. And it was always a wonderful thing. It's where Teddy Roosevelt, made it all a giant state park years ago, and that's where El Capitan Mountain is, and all this beautiful stuff. It's an incredible place. You should go there if you get a chance. But the Ahwahnee Hotel is very special because they have black tie dinners, and so the kids got to dress up in their fancy dresses, and I had to wear a tux 4 nights in a row to have dinner, and it's really quite spectacular. But we always quite did that. But the main thing is El Capitan, they had a Jeep ride across the mountain that you could go up on the backside of El Capitan, where you could be at the top of the mountain and see it. So we went up there. My daughter Jill and I, she was 10 years old. So we went up there, and there were some people up there, maybe 15 people, and a lot of rappellers. There's people who actually climb these rocks and rappel down and stuff. And I'm talking to somebody, and I hear this, Dad. And I look, I can't see her, and I can't see her anyway. And I hear the voice, and I look over the side of the hill, of the mountain, and there she is on the ledge, hanging onto the ledge with her fingers and her feet on a little tiny ledge down about 10 feet from the top, and it's straight down. And folks, it's like 2,000 feet straight down. And I panicked. I didn't know what to do. And I saw these two young girls over there with rappelling equipment. I said, "Can you help me, please?" I said, "My daughter's in big trouble." And she looked down over the side. She took the one girl, wrapped the rappelling rope around her waist. The other girl just jumped off the edge of the mountain right down to where my daughter was, wrapped her up with a safety thing, one of those little buckle deals, and then we pulled them up. And I tell you, folks, I didn't recover from that for several days. I really thought that would have been it. But that was the most scared I have ever been. I've been shot twice, both times in Beverly Hills. I got shot once in Bob's coin shop, and then I got shot another time on a drive-by shooting. And I was luckily they weren't serious, but I was shot. That never even bothered me at all. Anyway, in fact, trading is a lot easier than any of that stuff. Okay, let's move on to a couple other things that we want to. Yes, I was shot, a drive-by shooting. Some kids on drugs were in Beverly Hills, and I was with, who was I with? Oh, one of the Drexel people, and the bullet went through and grazed me, and had to have about 32 stitches, but it was not a problem. Then the robbery at Bob's store, I was shot in the lower abdomen with a 22 pistol, and that had to have some surgery, but that wasn't very much either. But I never had to go to the Army because I was 4F. So anyway, that's neither here nor there. Let's move on to some of those. I don't mind answering these questions, so if you have them, I'll try to answer them the best I can. Anyway, let's move on here to the second thing that we want to talk about here is let's just see where we are. I need to check something here, folks. I wanted to see where gold is today because this number that we're looking at here down here at 1846 is really very, very important, and I think it's something we ought to do. Also, yesterday this morning when I was doing this thing over in the UK, they were talking about, because they're dealing with the pound, is they were talking about Fibonacci and all this stuff, and so they asked me to get on, and so I just did this thing yesterday that we were looking at. You'll see here that we had this big number up here at 133 in the pound, and this is a 15-minute chart, and all I was trying to do is to show them that these numbers repeat over and over again, and the patterns repeat over and over again. That's all I was trying to do. And everybody was wanting to talk about oscillators. They wanted to talk about MACDs and stochastics and all this stuff. And when I told them I didn't do any of that, they didn't think that I was telling the truth. I had a few people that knew who I was that know that I don't use that stuff. And the only reason I don't use it is, folks, I don't understand it enough to use it. I mean, I've looked at it a lot, but I try to keep it as simple as possible. Those little bar charts are what's really the important thing. If you've got more buying, the prices are going to go up. If you've got more selling, prices are going down. That's the main thing that you want to be looking at. Oh, by the way, on a programming note, you don't want to miss tomorrow. because you're going to have none other than Bill, who calls it like it is, Meridian, and he's going to be talking to us tomorrow about those oil stocks and some of the other predictions that he's made. So Bill will be on at 9:30 tomorrow. We'll have to be paying close attention to him. Okay. The other thing, I'll cover that. I'll cover the other thing about the doctor a little bit later, I suppose. Hold on just a second here. I have to go in for some more blood tests and stuff for tomorrow. But the physicians now are they're requiring me to take a COVD test tomorrow. So that's going to be required. I said, I don't want to do it. And he said, well, you'll have to get another doctor. So I said, well, I guess I'll have to have it done. So they're not giving you much of a choice anymore. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. So we're going to take a look at a couple of futures markets here. First of all, we're going to bring in the natural gas because we've been started talking about that last week when we made the 50% retracement and then reversed very quickly. And you saw we had the gap down on Monday, and we've just been getting hammered in that natural gas. But the pattern is getting very close to completion, folks, down around that 250 to 249. It's not ready yet, but it's getting it could be today. But I think we'll probably be able to look at it on Monday to see if we're right at that level. That would give us a really good spot for risk control. And remember, these patterns don't work all the time, but they work some of the time. So you have to decide, what you're going to do as far as risk control. And that's what these patterns really do tell you, is that when you break through these ratios that are supposed to be support, you don't want to be long, and if you're short and they go through the resistance, you don't want to be short. So make sure you do that. Now, here's one that we should give everybody in the den here that have been bouncing on this for quite some time here, is this coffee trade that Mr. Z and Ruby and Bob A and a couple of these other guys in the den that were talking about it a long time ago. You can see that we were sitting down there. We had a little 3 drive to a bottom. It stayed at that support at that 103, 104 level for a long time, and then it gapped up, had a tiny little bit of a pullback, and folks, it is off to the races. This has gone from basically 102 to 122, folks. That's 20 handles in coffee. That's enough to buy yourself a nice car. I mean, that's a heck of a move. Now, what we're doing right now is setting right at the 61% retracement of the high that we made back in September. And you noticed we're having a little narrow range day in here today. So this could be some resistance up in this area. And this is where you have to make a decision to whether you want to stay with this or do you want to take profits in the hope for a pullback and stuff like that. That's a trading decision that you have to make all the time. That's one of the reasons why I try to talk about what we're looking at in the gold market. I mean, we've been watching this gold market go up and down now for, well over 2 months, trading it from both sides. And we went short, of course, at, the 1958 level. And then we added at 1893. And now we think there's a possibility that gold's going to break down. Now, if it does, that'll be something pretty good. If it doesn't, we're going to still make a profit, but it's not going to be nearly as much as we want. Remember, you're not going to get the high tick or the low tick very often in your trading career. That's just not going to happen. That's just flat out luck is what it is. So remind yourself of that when you're doing it. It does happen. You are being lucky, and pay the trading gods the price, because you certainly don't want to, get involved, with that without bothering yourself too much. Now, another one that we've been paying sort of close attention to that really hasn't moved very much, and that are these hogs. And I just want to get this up here because this should be moving a lot more than it is. Now we're coming into the holiday season now, where they'll be eating more hams and stuff like that. But look at the hog market. You see how it held at the 78% level this week? Now we never got below 64, but it hasn't taken off to the upside. This is extremely important support there at that 64 level, because we're trading at 65.80 today. And if we go below that 64 level, folks, that is not good. So that's why when you look at these the reason why these lines are important, folks, they act as support and resistance. But when they're doing that, it's telling you risk. If it goes below the support, that's what your risk is. And if it goes above the resistance, that's where your risk is. So that's the real function of this. It's not a question that they look good. It's a question that's about risk control, and try to, remember that when you're doing this. It's not about how much money you make. It's about how much money you don't lose. And that's the main thing to sort of remember as you're looking at these patterns as we go through there. Now, there's 2 more that I wanted to cover that I think are relatively important. And one of them, of course, let's just get this up here so we can see this. We've been talking about this for quite some time, and we'll get it up here again. And that is the copper. You'll be able to see this one real easily. We talked about it before. We had that big move where we popped above the 119. Then look what happened. We went almost up to the exact 1.27, missed it by 1 penny, made a beautiful ABCD pattern to the downside. That stopped at 318. We rallied up to the 61% retracement at 324, and here we are. We're trading 5 handles lower now, getting ready to make an ABCD completion down around 315 in the copper. So that's when this is a 4-hour chart. So each of these bars is 6 hours. So you can see there's about 3 days action in there. And that's what you try to do is, to pinpoint down where your best opportunity is, to either buy or sell. And that's what we were trying. And when you're wrong, just get the heck out of the way, because it's not going to help you to stay short if it keeps going up. That's for absolute certainty. So remind yourself of that as you're looking at this. And I have one more that I wanted to cover that I think we're getting ready for a pretty big move, but it hasn't happened as of yet. So hold on one second till I get this little puppy out. And this is for Ruby and the Romantics in here, because she's been wildly bullish on this for a long time. And it is looking good, Billy Ray, and feeling good. This is something that's sweet and also neat. It's Mr. Sugar. Let's get it up here. You'll see here we're almost there, folks. That number is at 1586. We're trading at 1530. So we are very, very close. So that should be a double top when we get up there. Let's just get this so I put the whole chart up so you'll be able to see it. It's a beautiful double top up in this area. So we want to watch that one. You got a perfect ABCD, a double top. And that's where you want to be changing your position on sugar from long to short. But remember, folks, that 382 retracement we had back there in August. Remember, this is a weekly chart, and we were talking about it at that point. It came down 5 weeks and stopped right at the 382 retracement of the low back there. That was the actual low was exactly, I think, within 20 cents in the exact, from 1530 to 1520, it was 1470 to 1460, but that's where it was, and it's had a heck of a move here. So we're almost finished in this move in sugar, but then when it backs off, this might, sugar used to go to 66 cents years ago, back when Cuba was a big producer. That was back when Hector was a little pup, and that dog's now 25 years old now. Anyway, let's we'll remind this to keep an eye on the sugar, because we're getting up in here. I've got my limits on to alert us when that does happen, but we should make a new high. It'll probably make 16 cents a pound, something, an a round number. But, here again, it's not important. The most important thing is to see that it gets to that double top and the ABCD pattern. Then you'll be able to take a very close look at it. Remind him again that we do have Bill Meridian on tomorrow as our guest, so we'll be able to have a really good time, visiting with him. Remember, folks, the day after Thanksgiving, which will be the 27th of November, is the best update, probabilities of an update in the market for quite some time. So, and I believe we're trying to get Norm on. No, we haven't been able to get him on that yet. Maybe later we'll be able to have him on. But that is a very important thing, to pay attention to, the fact that has such a high probability. And then on the 30th, we have that big full moon, 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I want to switch over to the U.S. dollar index here and look at the weekly chart because this is really important from a technical perspective, I guess you'd say. You'll notice the time frame in 2018 when we were sitting at the 61% retracement, how the market stayed there for well over 2 months before it finally moved. As you can see now, what we're doing is we're setting at the 78% level, and here again, we're taking about the same amount of time. That time is running out. And so if we don't start to turn up here pretty soon and this starts to break down, folks, the U.S. dollar is going to be under a great deal of pressure. And that means most probably that the euro, which is 53% of the index, will also be moving, sharply higher. Also, the yen will be involved in that. That's about 15% of the index. And you'd want to watch the dollar yen because the dollar yen has been acting, just about as perfect as you could act with the commodity stuff. So anyway, we'll take a look with the Forex exchange, not commodities. But anyway, you need to watch it very closely. The key level is 91.30 in that dollar index. And that's what you want to be watching. And since we're so close to this gold breaking down, that that all could be interrelated along with the bonds. The bonds have at least had a little 4-point bounce here after the big correction, and so all of that, I think, is interrelated. Now, I don't know the ins and outs, the little nuts and bolts of the darn thing, but these patterns are telling me that something really big is getting ready to happen to that dollar index. The odds favor, chance favors the prepared mind, as Pasteur said, favors the prepared mind. So we think that this is getting ready to break out to the upside. So that's the reason why we happen to be short the euro. And, and so we think that is getting ready to go down. Now that has, the dollar, the gold is, I don't know how those things are interrelated, folks, because I don't see a correlation. All I'm looking at is the patterns. I don't know the fundamentals. I know you people think that I know them, but I don't. You send me emails about how do you explain this. And folks, when I tell you that I really don't follow the fundamentals, I really don't follow the fundamentals. My fundamentals I get from Frazier and what's the one the one with Charlie Sheen I like so much, three boys and a man or whatever, two boys and a man or whatever, 2 men and a baby, whatever it is. I really enjoy that one. That's written by the Larson boys, and they're really, and Charlie, what's the other guy's name? That's a great writer, and the Frasier one. I mean, I just love that show, and so I kind of keep my eyes on that, and I watch, of course, the History Channel, which I like a lot, but I gave up on this other stuff about a month or so ago. Anyway, let's move on to a couple other things that we need to mention here about the overall scenario coming in to this weekend. This is a big weekend because it's a holiday week coming in. It's really shortened week. Very little trading on Wednesday and very little trading on Friday usually, but Friday has the probability of being an up day better than 76% of the time. In other words, it will close higher on Friday than it did on Wednesday. So that's it. And remember, the rest of the world does not celebrate Thanksgiving, so you'll be seeing other action in the DAX and the FTSE and the Hang Seng and some of the others. And I think that's another thing to take a close look at that as we watch these things. One of the other shows that I really love, folks, is on Sunday is The Untouchables with Robert Stack. You know, that goes back into the 1950s and 60s, and to see these stars playing on these little bit parts, and it's just really incredible. I mean, to see them, I mean, you'll see Telly Savalas, Henry Silva, I mean, just one after another. Of the guys that made it, you know, really big, and Jack Klugman, he's always on there quite a bit, and Jack Weston is always on. I mean, it's really, Jane Blondell was on. I mean, and Natalie Wood was in there. I mean, it was really incredible to see some of these, and you know, great stars on that. And I sat there and watch it on Sunday, and I point him out to Sarah. And of course, she's not a big movie fan, so she doesn't really get into it too much, looking at that stuff. Okay, now what's going on here? Let me check with the markets here, folks. Might have to do a little correction here. Give me 1 second here to get this out of the way. And I have to get the layout set. Did something wrong there. Not good, Billy Ray, not good. All right, there we'll be up here in a minute. Let's see where we are. With the gold. We're still trading at 1855, still hanging in there pretty good. And let's see, the stop and P is at 35.58. The key level today in the stock, folks, I told you, if we go below that 35.40 by very much, we went down and touched it. Did we touch it? Yeah, we touched. We went below it by one tick, didn't we? Yeah, well, there's where the stops were, 35.42. Now we're trading 16 handles higher, but that's neither here nor there. I think that the key level today to watch is 35.79, folks. That's the key level, and the reason why that is, that's at the 382 number to look at. And just to show you the importance of the 382 number, one of the things I do each day is I work with Trader Tom, of course, and he's going to be on with me when we do our live trading thing in December. He and Jim Twentyman are going to be on to, not for a very long time. They're coming in for 10 or 15 minutes and talk a little bit about trading and something that they're looking at. But this is what we were looking at early this morning when I was doing that London thing, is when the DAX opened, you'll see that it opened right at the 382 level, went above it by about, I think the high was 131.15 or something like that, and then it went down and just really got hammered. But that's why you want to keep an eye on that. You know, that's the real secret to looking at this. See, no matter whenever you're looking at these darn things, they're all doing the same thing. It's no question about it. Yes, Terry, you know, the platinum had completed that big ABCD up there at the 960 level. Now we're trading about 30 handles. I don't know where is platinum trading today. I haven't even checked it because I'm not involved in platinum, but it should be around 925 would be my guess in platinum. But the high was 960. That's where the ABCD came in, 961. It's at 985. Are you kidding me? Shut the front door. Let's take a look at that. Thank you. My goodness. Billy Ray needs to look at that one. I'm not involved in it, but the fact that it's doing something that much different is really important. Well, let's see what's going on here. Where is the old platinum at? There we are. Let's get it up here. and get the old daily. Wow, is it really that high? By golly, no. I'm showing 951. What are you talking about? 985. What are I don't know what you're talking about, Bubba. It don't look right to me. Let me get this up here. Hold on just a second here. Oh, you played games with me. Well, you got my attention. That doesn't scare me, though. Anyway, you can see it makes the ABCD. Oh, I didn't draw it in right. Let me draw it in correctly, because this is one I covered on the video. You'll be able to see it here now in just a second. But that's the problem with doing a radio show during the most busy time of the day, which is the first hour, is you don't get to catch up with these things. And there's your ABCD right up there at the 960 level. We backed off to 935 last night. It's not going down much. That's a good sign for platinum. So we'll see. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we will be talking to Bill Meridian tomorrow at the 7:30 at the 9:30 time frame. So try to look at it. I posted the forecast, the AI today. Watch 11:35, 11:50, 12 o'clock area. If that's correct, we should be somewhere around 35.75, 35.90. and that would be a spot where maybe it'll turn, maybe it won't, but that's what the forecast is. Remember, these forecasts are only right about 70% of the time, but when they are right, they do work pretty good. There's a couple of them that are working extremely well today, especially in the crude oil and the natural gas and the treasury bonds. And the gold market. The gold market, I'll bring that one up for you to see, where we are too, because that has a negative bias. Even though we're in the midst of a little bit of a bounce, you'll be able to see here that the overall picture for the gold market does not look good for today. If I can get the little module moving over a little bit, and there we are, you'll see that that should top in about an hour if that's going to be the case. Well, I was fortunate today that Al was not able to get the calls up. The board was just lit up. You weren't able to get in. There were just too many calls. So maybe tomorrow we'll have some questions for Bill, and he'll have some great news. Remember, he made that incredible call last week about the oil stocks, and the day after he made that call, they were up 25%. Boy, that's one heck of a move. Why that happens, I don't know. It's all psycho-related, I suppose, but those are the main things. Folks, key number to look at, 35.75, 35.79 in the S&P. If we get above 36, that will be very, very bullish to the market, and that's what we need to pay attention to. But that 35.75, 35.79, very key figure to look at. And then, of course, if the gold would happen to break below, 1846, that would tell us that we're probably going to break the 1800 level and make a giant ABCD pattern down there around 1760 to 1740. And boy, you got to have your